All right, everybody, good afternoon. Welcome to today's webinar. It is the afternoon, noon here on the East Coast. I'm Jerry D'Ambrosio. I want to welcome everybody to today's webinar. Hope everybody's doing well, having a good week, middle of the week, literally, noon here on a Wednesday. Just want to do a quick sound check just to make sure you guys can hear me okay. I want to thank you folks for joining me who are connected via GoToWebinar and also YouTube. So fantastic. Michael says, okay. Terry says all good. Awesome. So anytime I get 1, 2, 3 people telling me that they can hear me, I know everybody can hear me. Well, I can't say that because if your speakers aren't turned on or if you're having audio issues on your end, you wouldn't be able to hear me. But it looks like I'm coming through loud and clear. Thank you, everybody. Really appreciate it. So again, my name is Jerry D'Ambrosio. I'm the manager of educational content here with VectorVest. That's me with hair. Had to shave my head not too long ago. Hairline was becoming laughable, so I had to get rid of that. But this is our education team. Really proud of these folks. You know, this education department has grown quite a bit over the years. I've been with VectorVest now 17 years, almost coming next month. And when I first started, there was 1 or maybe 2 folks, two people in the education team. And back then, our education really focused on everything to do with VectorVest, of course, right? Our method of stock analysis, our method of market analysis, everything that has to do with VectorVest was really what we focused primarily on back then. We've evolved quite a bit over the years because now we teach folks how to trade options. We teach folks how to manage their retirement portfolios. We teach swing trading strategies. So we have you guys covered, meaning no matter what type of portfolio you're managing, and if you are managing different types of portfolios, good for you, because that's the way it's done. You know, a swing trade shouldn't go in the same portfolio and be managed the same way as a longer term investment. So it makes sense just to separate the vehicles, the instruments, into different portfolios. So we have you covered no matter what type of portfolio you're managing. Tim says you are not showing your true height in this picture. No, I'm not. No, I'm not. Ron is taller than me here, and that's not the case. Ron's tall, though. He's a tall gentleman. Can everybody hear me okay? Everybody hear me now? There we go. Looks like I'm back. Sorry about that. Just, okay, so good. Dennis says, okay, sound disappeared. Now you're back. Yeah, that was just very, very strange. GoToWebinar just completely dropped my mic, changed my audio output, and then changed it back. How about that? But it looks like I'm back okay. Awesome. Yeah, so really proud of these folks, you know, very, very smart bunch to learn from, absolutely. So here's what you're going to learn today, okay? First, the difference between fundamental investors and technical traders. The VectorVest method of merging the two. So we'll talk about the differences between the two fundamentally in terms of their beliefs or their belief on what moves stock prices. And then we'll talk about how to merge the two because we feel that both are correct. You know, so, and then what we're going to finally do at the end is show you how you can quickly and easily identify trades, okay? Not only trades, but investments as well. And I think this will help. If you guys stick with me to the end, I will share with you a copy of today's slides. I have a lot of slides today. Normally I go into the program a whole lot. I will do that at the end there. I will go into the VectorVest program a little bit, but I do have a lot of slides that I want to show, that I want to give to you guys. Stick with me to the end. We'll be together for about an hour, and I'll put them so that you guys can find them in the handout section of your GoToWebinar control panel. All right, so the two different camps of investors are, first, there's the fundamental analyst. Okay. Now, again, fundamental and technical analysis are the two major schools of thought when it comes to trading the market. Yet both are polar opposite when it comes to their fundamental beliefs on what moves stock prices. They both research and try to forecast future stock prices. But the way they go about it is completely different. So the fundamental analyst evaluates stocks by attempting to measure intrinsic value. So no matter what types of metrics they're looking at, that's basically what they're trying to do. They're trying to come up with an intrinsic value. What is this company worth? Not what it's trading at. What is it worth? Fundamental analysts, they study everything from the overall economy, industry conditions, financial strength of the individual company. So some of the things they'll look at is earnings, corporate earnings as well as company earnings, right? So what is the status or the trend of corporate earnings as a whole, S&P 500 earnings as a whole, for example. And then they'll look, of course, into the individual stock and does the stock or the company that they're interested in buying have solid earnings growth as well. They look at macroeconomic factors, interest rates, inflation. Okay, so they're trying to gauge the financial strength of the overall economy, financial strength of the sector, and then, of course, the financial strength of the underlying stock. Earnings, expenses, assets, liabilities, they're all looked at when it comes to fundamental valuation, a longer period of time, right? It's an investment. Fundamental analysts don't necessarily trade often, but they're really trying to find long-term, solid, sound investments, and these are some of the things that they look at. The other camp is the technical analyst. Okay, technical analysis differs from fundamental analysis in that traders try to identify opportunities by looking at historical trends, statistical probability, and historical trends such as movements in primarily price and volume. So a true technical analyst is not looking at a company's earnings or their sales growth or their PE ratios or really what they're worth currently. Okay? The assumption by a technical analyst is that those fundamentals are already factored in. They're already factored into price. So really no need to pay any attention to them or spend time researching them. A technical analyst attempts to measure intrinsic value. They don't attempt to measure intrinsic value. They use stock charts and identify price patterns and trends that suggest what a stock will do moving forward. Patterns repeat themselves. So they're hoping that similar patterns that occurred historically that resulted in favorable opportunities will occur again moving forward. Okay? Who's right? If you get them both in a room, if you get the fundamental analyst and the technical analyst in a room, I told you guys earlier, they have some true fundamental beliefs in what moves stock prices, and they will argue till they're blue in the face and about who's right. We believe that both are right. Both are correct. So what we want to do is merge the two, is pay attention to both. Pay attention to the company's fundamentals. Is their earnings growth strong? Are they undervalued? Is it a safe investment? Is the industry strong? Is the overall market in a favorable environment to buy stocks? Then, what a fundamental analyst can do is, even if that person is trying to hold on to a stock for a longer period of time, there's nothing that says that we can't look at the short-term, intermediate-term, and long-term trend of the stock to maybe identify a better buying opportunity. And if you don't care about that, then that's fine. Fundamental valuation If you're looking to hold on to the stock for the long term, that is obviously a must, right? You have to assess the company's value, their safety, to determine whether it should be a long-term holding or not. And if you don't care about exactly what price you get now, then go ahead and buy it and you're holding it for the long term. But to maximize returns, a fundamental analyst should look at a short-term technical perspective on the stock's price to determine if it's favorable right now to buy it or maybe wait. Let's look at it on the other side of the spectrum, right? The technical analyst. The technical trader is really looking primarily, right, at what's price doing right now, what's volume doing right now, what's the pattern that's setting up, what indicator am I using right now, short-term indicator to identify a good buying opportunity. I may not want to hold on to the stock for a long period of time, right? A technical trader, a swing trader, their objective is not months to years, it's days to weeks. But at the same time, if I'm looking at, let's say, price retracing from support, which for, let's say, the third time, which is a really strong bullish short-term signal, but I am focusing on companies that are strong, not just stock XYZ, who is at the bottom of their industry. Sure, the price is setting up nicely now, right? Price is retracing from support, volume is picking up, great. The technical perspective of the stock looks good. But if we're going to try to increase our probability of success on every trade that we place, doesn't it just make sense to make sure that we're buying only the best stocks, the fundamentally sound companies? Dr. DeLito once wrote in an essay not a long time ago, good portfolio management starts with buying the best stocks, no matter what type of portfolio you're managing. Okay, so that's what we're going to look to do today. We're going to merge the two. So, as an example, let's take a look at an example. Just a couple of days ago, June 12, 2023. Okay, just an example, McKesson Corp. Let's take a look at VectorVest's analysis. Okay, and most of it is fundamental analysis. Current price as of sometime during the day on June 12, 2023 was $393.05. We think it's worth $538.43. Okay, we think it's worth $538.43. So, man, if I'm going to buy a stock, not only even for the, either for the short term or for the long term, I feel pretty good about buying it at a price of $393. If it's truly worth $538. Again, I don't care if I'm buying it and only want to hold on to it for a few weeks, maybe a month, or for a few years. I feel pretty strong about a company like this. Again, no matter if I'm trading it or investing in it. All right, so that's a pretty good start. Relative value, if you guys are not VectorVest subscribers, we have a lot of folks in here that are not VectorVest subscribers. Relative value, RV, measures long-term price appreciation potential. Long-term upside potential. 0 to 2 scale, above 1 is good, below 1 is bad. So at 1.46, that's excellent. So McKesson Corp, not only is it undervalued, but we feel it has a tremendous upside price appreciation potential over the next 1 to 3 years. Great. If I'm trading it, I like that, right? If I'm investing in it, I like it. Relative safety, it's above 1. RS, it is above 1. 1.03, so it's a safe company. It's a relatively safe company. I'm going to get back to relative timing in a moment, but some other fundamental data here. GRT, which is earnings growth rate, that stands at 25%. Earnings per share, $27.45 a share. Nice strong earnings yield of 7%. They pay a dividend as well. Okay. And so that's the type of numbers. Those are the type of numbers that you want to see, and those are the type of numbers that reflect a strong, fundamentally sound company. Okay? Get used to those numbers, get used to those values, because we're going to look at McKesson Corp historically in a moment, and we're going to look for better buying opportunities. but we want to make sure these things are in place. These numbers are in place. Okay, so let's rewind the clock a little bit. The hard right edge is October of 2022. You'll see why I went back in a moment, but October of 2022 is the hard right edge, not too long ago. Currently, as of October 2022, got a hold rating. All right, so it's not a buy, but the earnings per share over this 1 year time period go from bottom left to upper right. The relative value indicator at that time was above 1.3, so that's good. Relative safety indicator was really high at that point. It was almost at 1.2, that's good. And look at the earnings growth rate at 20%, again, as of October of 2022. So if this were the hard right edge, and you're looking at this stock and you consider buying it, are the fundamentals there? Are the fundamentals favorable? Yes. Right? They are. We know what favorable levels are, and we know what to look for. RVRS above 1, earnings per share bottom left to upper right, solid earnings growth rate. It's got an earnings growth rate of 20%. Current sum of interest rates and inflation right now is about, what is it, about 11% maybe? Inflation's about 5, interest rates are about 6, roughly. So you want companies to be able to grow their earnings faster than the sum of interest rates and inflation, right? Interest rates and inflation are the enemies of earnings. So solid earnings growth there, well about 20%. Is now the time to buy the stock, though? You could see it's kind of capitulating here after a pretty sharp pullback over this 4-day period. It's off of its recent high. It's above our stop price, which our stop price is a 13-week moving average. It's above our stop price. It has a hold rating. Is now the time to buy it? Well, if I was to trade it, if I was to consider this a short-term trade, no, now is not the time to buy it. I don't buy during quiet periods, right? You don't trade stocks during quiet periods, during consolidation after a run up, during or capitulation during a move lower. Okay, in this case, if I was bullish on the stock, and I am, right? I'm looking to buy it. Fundamentals are strong. I'm looking for a better buying opportunity than just, hey, let me buy it now and see what happens. So let's zoom in a little bit, and I see, and now I'm kind of taking off the fundamental indicators because we've done that work already. We don't have to keep those fundamental indicators on the chart anymore. If we've analyzed the company, we come to the understanding that as a fundamentally sound company, you can then get rid of all those fundamental indicators and just look at price and volume. And that's all I have really on the chart. Price at the top, volume at the bottom, and support and resistance overlaid on price. So in terms of a shorter term technical price perspective, what is price doing? It's settled down or settled in to this support zone. Why is it support? Well, it used to be resistance. Price had a hard time breaking above it in May of 2022. June of 2022 had a little bit of a tough time in August before it did break out. So it was resistance before price broke out of it. And now what's happening is it's coming back down. And generally this is what you see most of the time. It doesn't always happen right away, but eventually if price breaks out through a supply zone, a resistance level, price will come back down to test that zone again. And again, it is now support. So when I said earlier that I don't just buy when price is during quiet periods, I'm not buying at support either. You don't buy at support. Why? Because price could break down through support, right? It's considered the floor. It's considered a demand zone, but that doesn't mean that price is always going to bounce off of that zone. What we look for is price to retrace off of that zone. And what I would look at is kind of the most recent high within this quiet period. Okay, you had a little bit of a rally, a retest, kind of a little bit of a rally, another retest. So we're just moving sideways, bouncing back and forth here. I see a high price there right around 350 and change or so. I would look for price to break out above that price on high volume, which it did there on October 4th. Nice breakout on strong volume. There's my signal to take the trade. Now, I know you're probably saying, well, if I would have bought it the day before or any time during this period, I would have gotten in at a lower price and I would already be profitable once the stock broke out. Now, of course, you can say that in hindsight, but that's not the way you trade these types of situations. You wait for the breakout because, again, if you just traded during this period thinking you're going to get a jump on the breakout and price breaks down, if selling pressure overcomes buying pressure, you got yourself a losing trade. So you wait for the breakout, you wait for the good volume, and you take the trade. Okay? Also, what was happening then, this stock, we looked at the long-term chart, right? And it's in a strong uptrend, strong long-term uptrend. I would almost guarantee that price is above not only the 50-day moving average, but also the 200-day moving average. You got an intermediate term uptrend, you got a strong long-term uptrend, but you're kind of coming out of a short-term oversold situation. The stochastics oscillator, which is at the bottom now, had recently just crossed from below 20 to above 20. So you're getting multiple signals here, multiple bullish signals telling you to take this trade. Price retracing from support on strong volume and the stochastics oscillator crossing from below 20 to above 20. If this wasn't McKesson Corp, and the RV wasn't above 1, and the RS wasn't above 1, and it didn't have strong earnings growth, and it wasn't overvalued, if this was just any old stock, and I had the option to buy that stock, which may be showing me a very similar setup, or buy McKesson, I'm going to favor buying the better company. Okay? Always keeping in mind what the fundamentals are. I'm not just analyzing a stock for its based on its technicals if we don't have the fundamentals behind it. Okay? So let's talk now about, first off, if you're a fundamental investor and this is a company or a stock that you are considering holding on to for a longer period of time, then you're not going to really consider what I'm about to talk about next, because a long-term investor isn't necessarily going to look at short-term resistance to help manage the trade. But if you're a fundamental investor long-term, this is a good buying opportunity in a fundamentally sound company. Okay? It's showing short-term technical strength within an underlying strong uptrend. And again, the fundamentals of the underlying fundamentals of the company are strong. So if this is an investment, you're on your way. You got it at a pretty good price compared to the recent high. It did pull back a little bit, fell into support, retraced from support. You're a fundamental investor. Why not pay attention to this stuff? You're able to maximize returns if you do. Now, if you are a trader and the fundamental analysis has been done via the VectorVest indicators, you recognize that on a short-term technical basis, price just recently retraced from support. Stochastics went from below 20 to above 20. I'm going to look at this zone up at the top, which is the actual high, almost a little double high there, double top. I'm going to look at that as resistance because price did fail to break above, 370 or so twice. So if price gets to that 370 zone again, I'm going to look to take my profit off the table. Okay? One of the things that you need to happen, though, after the breakout is follow-through. And the next day you did get follow-through. I know it's a red candle. It means that the close was below the close of the previous day. But during the day, you had a nice run up there, which confirmed the breakout candle, and that's your entry. Now, we'll get to that. We'll kind of get to the performance of that stock in a moment. But the trade date there was October 4th. The question always becomes, should I buy the stock or not? And the answer lies in a market timing graph or just in our guidance in general, whether we say that it's okay to buy stocks or not. And that's based on not guesswork or, hunches. It's based on data and indicators. So on October 4th, let me back up again because the hard right edge here is now October 4th. So you got your technical stock breakout Again, the question becomes, should I buy it or not? Is the market in an environment where I should buy stocks? And on October 4th, a couple of things happened. First off, the market broke out, right? Market really popped there on October 4th. The MTI and the buy to sell ratio just prior to that breakout there were below their respective levels, where we feel that upside potential outweighs downside risk. So when the MTI goes below 0.6 and the buy to sell ratio goes below 0.2, and then the market rallies, and we will tell you when that happens that it is a good buying opportunity. It's known as bottom fishing, or it's known as the blast off phase. If you're a little bit more of an aggressive trader, you're going to take that market signal as a signal to buy stocks. So we got both in our favor. We have the market behind us because it's just breaking out there on October 4th out of a really oversold situation. And we have a really strong stock setup as well. This is a long-term graph of McKesson. And I've overlaid our confirmed market calls on here. June 20 to almost the hard right edge there. It is the hard right edge. Basically yesterday or today. The stock price and this teal line there is our stop price, STOP price. And the red and green arrows are confirmed calls. Never once. So why do I have this? Well, as an investment over this time period, there is no reason why you should have sold McKesson. Even though we got a confirmed market down call, the stock never got a sell rating. So what we say to do at confirmed downs, stop buying stocks and manage your positions the way you sought out to manage them when you bought it. And if McKesson is meant to be a long-term holding, there's no better stop exit criteria to use than when the stock gets a sell rating. So even though we got confirmed down signals during this time period, never ever once fell below our stop price, never did we give it a sell rating. So you can continue to hold on until you do get a sell rating. Nathan says, what about when the market is showing signs of fatigue but still getting bullish indicators? That's a whole different story there, Nathan. It's a whole different topic. I'm not going to get quite into that because there's a lot of nuances there. But here from October 4th, just a couple of weeks. So remember, there was our trade date. And this is a lot of times what happens. You get your breakout above support, you get your follow through. What happened immediately after we took the trade? The stock price fell. Where did it fall to? It fell right back down to support. Did it ever break down below the floor, though? Did it ever break down below support? It did not. It did not. On this day, it actually touched it there at the open and rallied strongly, never fell back below support, which, by the way, if this is a trade, that support level that I'm buying off of is now my stop loss. Below it is my stop loss. If price breaks down below that floor, which has held nicely there over this time period, then you take the trade off the table. You cut your losses. It never did. Price rallied, and look at what it did on this day right here. It reached resistance, and then just completely blasted through it. So you got a really strong bullish signal, a support retracement on strong volume. Stochastics goes from below 20 to above 20. The stock is an intermediate term uptrend. It's in a long-term uptrend. And last but not least, the fundamentals of the company are strong. I talked about merging the two, right? You remember that slide, that the train tracks coming together? This is what we mean by merging the two, paying attention to it all, because that increases your probability of successful trades when you incorporate both. Okay, so the stock price just continued to run up day after the breakout above resistance. Now on this day right here, now you remember it's a short-term trade. I mean, boy, this is a home run, right? You only can hope for a winning trade like this. But as price gets overextended, as it breaks out above resistance, as the stochastics oscillator, which was below 20 when you took the trade, is now above 80, and a bearish candlestick reversal signal appears called a one black crow. Okay? If you're a trader, you got to consider exiting the position and taking your profits off the table. And the following day, you got confirmation of that one black crow bearish formation. Look, the stock is still a buy rating. It's a buy rating, right? But you're a trader, right? You're a trader and you're looking to maximize returns. You're not too concerned with the rating of the stock or the recommendation of the stock. It's now price performance. You're in the trade already. It's price performance that's going to really dictate when you take your profits. And a bearish candlestick formation in an overbought price situation with follow through is that signal to take it off. Okay, so let's kind of move forward here. Fundamentals haven't changed. Here is where we exited. This red candle right here. And I know what price did for the next couple of days. I don't care. Price moved a little bit higher after I sold it. But then broke down quite a bit, right? Didn't it? It made a new high there, but it broke down quite a bit. And look at where it landed. Look at where the low of this day was. We're out of the trade already. But look, why not look for another opportunity, right? Have the fundamentals changed? They have not. So you have a successful trade, you take your profits, you keep the stock in a watch list, and you look for another buying opportunity. And my mouth waters when I see price making a new high and then retracing, either landing in at an old high, which it did here on this day. It kind of fell back and landed right back into the support zone. Remember, it was resistance, now it's support, but there was no retracement off of that support level. Price crashed the very next day and fell right back into the 340 support zone. Well, then you got your retracement off of that zone. There's your other buying opportunity. Okay? And then when price hits resistance, you look to take your trade off. All right? Let's look at another example. Everybody with me so far? Any questions at all? I seem pretty tuned in here, so that's good, unless you're sleeping. But let's look at another example. June 12th, just a couple of days ago, UnitedHealth Group. I don't care if I'm investing in it or trading in it. The fundamentals are important. Nathan says the RT isn't concerning. RT of what stock? When you say concerning, that would mean that you're worried about it. So the RT, I don't know what the RT was because I don't have it on the chart. I'm just looking at some other technical indicators. But on June 12th, here's United. Let's take a look. 491 and a quarter, roughly. We think it's worth 543.68. So another good start to either a longer-term investment or even a shorter-term trade. Relative value, okay, 1.37, good upside potential, okay. Relative safety, 1.30, it's a safe stock. Right now, as of June 12th, the RT was at 0.93, so it's considered to be in a downtrend, okay. Earnings per share, $25.60. Earnings growth rate at 18%. It's currently got a hold rating, so maybe right now is not the time to buy it. Right? If you want to buy it for the long term, maybe right now is not the time to buy it. It's a fundamentally good company, but looks like price is softening a little bit. It's pulling back. RT's below 1. It's got a hold rating. Maybe it's not the time to buy it. Okay. Also pays a dividend, good earnings yield, good earnings growth. Fantastic company, fundamentally sound company, but right now may not be the time to buy it. Okay. So let's go through let's actually, you know what? Let's do this. Let's look at United today. Let's look at United today. Okay, here's a 1 year. Oh my gosh, 1 year chart of United. So is now the time to buy United? I would say you're getting a bargain, that's for sure. I don't know why did price fall so fast here today? United CVA stocks drop as Americans get surgeries delayed due to pandemic. Okay, so down pretty big today. Now the time to buy it? I would say no. Fundamentals are still good. Put on earnings per share. I don't like how price is below the 200-day moving average. So the stock is in a long-term downtrend. It's still a fundamentally sound company, but now is not the time to buy it. Yeah, all health care stocks seem to be down today. Yep. Now is not the time to buy it. So this is right now, the hard right edge. Okay? But February of 2023 is the hard right edge on the slide that we're looking at. So are the fundamentals strong? Absolutely, even as of February. RV above 1, RS above 1, earnings growth rate at about 17%, earnings per share strong. Okay? So here, as of the hard right edge, taking off, again, this is February of 2023, taking off the fundamental indicators, because we all agree that the fundamentals are strong. Buying opportunities are abundant, either for a long-term investment or a short-term trade. So on April 15th of 2021, what did price do there on that day? It broke out above resistance, didn't it? 1 touch, 2 touches, 3 touches before a breakout on strong volume there on April 15th of 2021. Buying opportunity. Buying opportunity if you're trading the stock. Buying opportunity if you want to hold on to it for a longer period of time. It's a fundamentally sound company breaking out of a technical channel. Good buying opportunity for everybody. I know it sounds a little foreign or unusual when I'm talking about how fundamental investors who are buying stocks for the long term are paying any attention to technical indicators. I know it might not sound common, but it's something that we've done and taught for over the years. Paying attention to both and merging the two. Okay? Nathan says, are you waiting for it to break support before committing to the buy? Waiting for it to break resistance before committing to the buy here? Yes. Yes. Waiting. Yes, absolutely. That's just support and resistance 101. You don't buy at resistance. You buy when the stock price breaks out of resistance. You don't buy at support. You wait for the stock price to retrace from support. So love this setup on June 21st of 2021. So maybe you didn't get the breakout. Maybe you didn't trade the breakout. And what happens after the breakout above resistance? What did I say happens most of the time after a breakout above resistance? You eventually get a retest of that zone, like we did at the end of June of 2021, giving us another buying opportunity. Once again, in October of 2021, price fell back to that level again, about 375, retraced from that support zone, giving you another buying opportunity. You can continue to trade the same stock over and over and over again. So with this entry, the recent swing high, which was resistance, would have been my profit target. And you can see price got to that zone and retraced from it. I'm taking my trade off. I'm hoping actually, that price does fall back to that 375 zone again so I can buy it back in. And you can see that it did. And then what happened? Boom, you got a retest of resistance again, and I'll be honest with you, I probably would have exited the trade right around that area, considering where you bought in, right? If price hesitates at resistance and even pulls back a little bit, I have no problem taking the trade off. What happened though? Price broke out through resistance. What does that resistance level become? It becomes support. Price makes a new high there, pulls back to that support level, and just continues to do this over and over again. Okay? So as a technical investor, as a technical trader, boy, do I love stocks like this that react so similarly to support and resistance levels. Remember what I said before about technical analysts and what they believe? They believe that patterns repeat themselves, and the same types of setups that occurred historically, if they're and that had produced favorable returns, if they happen again in the future, those are the signals that a technical trader is taking. And there's no better indicator to use. Look, there are a lot of indicators, a lot of technical indicators, but there is no better indicator than support and resistance. Support and resistance, especially on companies like United, on companies like McKesson Corp, that are actively traded, that are fundamentally sound, and that behave this way at these support and resistance zones. Okay, so now you had it here. You had a breakout above. So this support zone, you had one opportunity, you had two opportunities, you had three, you had four in this time period to buy off of this $440 support zone. You had this $500 resistance zone that served as your profit target for each of those trades. Then what happens? Eventually, price breaks out through resistance. So buying pressure overcomes selling pressure. Look at what happened immediately is you got an immediate retest of that zone. And then now your support and resistance zones have risen, right? Now, what used to be resistance is now support, and you're just playing off of that support level, and your profit target is higher now, is the next resistance level. Okay, and again, fundamentals haven't changed. The fundamentals haven't changed. So now the question becomes, how am I going to find trades? How am I going to find trades? There are different methods. First method is to use a list. So if for example, I'm looking at the S&P 500 and I'm first analyzing the stocks for their fundamentals and everything looks good, in terms of the top stocks, they're undervalued, their relative value is high, relative safety is good, comfort index, earnings growth. You're doing all of that analysis first. Then you look at the charts and you're trying to find a support retracement, for example, or a resistance breakout, or stochastics crossing from below 20 to above 20, or a MACD crossover. Any type of technical setup that you're looking for, you go through the charts. That can become very time-consuming and not very efficient. My preferred method is to use a scan. And this is just an example of what a scan might look like. I took the Prudent Performers search, which is in the Strategies Prudent folder, and I added a stochastics crossover to it. So the Prudent Performers search finds stocks whose growth rate is greater than 15%. We know that's good. Relative safety greater than 1.15. Relative value greater than 1.25. The search is sorted by VST, so the stocks with the best combination of value, safety, and timing appear at the top of the list. We know that the search is filtering out only the strong, fundamentally sound companies, but look at what I did at the bottom there. I added a one-line parameter, and you can do this with our ProTrader module. Stochastics crossing below 20 in the past day. That's all I'm looking for. I'm looking for these good companies that have pulled back a little bit and whose stochastics oscillator has just crossed above 20 in the past day. So let me go into the Unisearch tool. And just as of a couple of days ago, don't worry about all these searches I have. This is my account. So like I said, I've been with VectorVest 17 years. I have all of these scans in here. But if I were to run the Prudent Performers, let me do this. Prudent Performers, same search you guys saw in the slides. And remember, I'm going to give you the slides. If I just ran that as of a couple of days ago, here are the returns. Here are only 4 stocks, but let's take a peek. Are they undervalued? Well, RV is undervalued. It's got tremendous long-term upside potential. It's safe. Look at the RT though. RT is at 0.93. All right, so we got to look at the chart. It's got a good VST of 1.2. Earnings yield of almost 13%, earnings growth rate at 19%, and that's the case for all of these. Okay, that's the case for all of these. Now, MELI a little bit overvalued, as is NATI, but that's okay if the fundamentals are strong. So let's look at the charts. Remember, we looked for or searched through a list of fundamentally sound companies that met specific criteria, but has recently pulled back a little bit and whose stochastics oscillator is crossing from below 20 to above 20. We know that's a strong signal, right? That's a bullish signal when stochastics goes from below 20 to above 20. Let's graph them. And let's add a couple of indicators here. Let's add, and you know, guys, this was just a couple of days ago, so it's not like I just sat here for days trying to find a candidate. That's how easy it is when you have a scan. So let's look at this. Let's look at this stock, RE. Yellow line here is a 200-day moving average. So let's kind of go through it. Price has just recently pulled back. We know the fundamentals are strong, right? Price has recently pulled back off of a new high. Actually, really strong resistance there at 392. It has fallen quite a bit here in the last couple of weeks, but it's capitulating right at the 200-day moving average, right at support, and the stochastics oscillator has just recently crossed from below 20 to above 20. Is this a good setup? Is this a good technical setup? Absolutely it is. Now, let's look at the next stock. Look, the search doesn't account for this type of this type of stuff. It's just going to bring any stock to that on the list that meets the criteria. I would absolutely immediately move past this. This is not a stock that I would trade. I don't like TTC either. Okay. Yes, the stochastics oscillator has just crossed from below 20 to above 20. It's a fundamentally sound company. It's undervalued. Good upside potential. It's safe, not in a very strong uptrend, but everything else looked good there in terms of the fundamentals. But again, it's now the time to buy it. Well, first off, it has a hold rating, so if you're trying to invest in it, probably a little bit premature. It's in a long-term downtrend now. The stock's price has fallen below the 200-day moving average. This is not a trade that I would take. And this is not an investment that I would take right now. So I'd move on. Here's Mercado Libre. It's a $1,200 stock. It's above the 200-day moving average. Looks like it's landed right back at support again. And the stochastics oscillator has crossed from below 20 to above 20. This is a trade that I would consider moving forward. Now, I would need here a stronger retracement off of 1201, and I'm not seeing that today. But I like this setup. Price is consolidating, but it's at the lower end of that consolidation range. It's at support. Again, I would just need a breakout above, a breakout off of that 1201 support zone, and 1334 would clearly be my profit target. Okay. Yeah, most of the time I do. Bob's asking, what's my support and resistance settings? Do I use the default? Most of the time I do, and I am here. Those are the support and resistance settings. Most of the time I do use the default. Okay, one stock I'm going to take a look at. That's it. What do I think of PWR right now? All right, let's look at the fundamentals. Earnings per share, good. RV, 1.3, good. RS, 1.4, very good. Relative timing's got to be strong, above 1.37. I would have obviously liked it much better here, but it's in a strong uptrend. You know, not my type of trade necessarily, because I like these. I like support. I like buying at support or off support, and here would have been a much better buying opportunity there on May 24th. There when it broke above resistance, came back down to retest it and retraced from it. It's a high momentum stock. It's a fundamentally sound company. It's in a strong uptrend. The market's rising. So it's definitely a candidate for sure. And these were just a couple of examples of some of those prudent for performers stochastics crossing from below 20 to above 20. Now this is as of June 2nd, just the day before. So this was a Churchill Downs breakout above resistance, retest of that zone, and now we're retracing off of that support zone nicely here. And this is just a couple of days ago. Here's another beautiful one, FI. It is a prudent performer, meaning it meets all of the parameters that we looked at in terms of fundamentals, but technically speaking, it's pulling back off of a new high. It's settled into support. Stochastics went from below 20 to above 20, and there was your signal on June 2nd, and you can see prices moved up nicely from there. Here was another one, GPK as of June 2nd. Price, resistance, 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 resistance. Breakout above resistance, came back down and retested. Now that resistance zone becomes support. You can see that it's holding nicely. Recent pullback off of a new high, right at support. Stochastics cross from below 20 to above 20. Look at that entry there on June 2nd. And you're probably saying, well, how'd you find this stock? Well, watch this. I told you. Churchill Downs, FI. These were some of the top stocks in the list on June 2nd. GPK, okay? So just a simple prudent performers search with a stochastics oscillator crossing from below 20 to above 20 is going to give you these types of opportunities. All right, no problem, Tim. All right, so you may be wondering or asking, how can I take my game to the next level? How can I start to do this and really learn how to incorporate fundamental valuation with technical analysis? And I just showed you guys really two indicators, support and resistance and stochastics. There are so many other indicators and techniques that you should learn to really take your game to the next level. So you have a choice. You could do it you could do nothing, right? Rather you not do nothing. You can do it alone. Maybe take bits and pieces of what I taught you here today, or you can let us show you, okay? And we always just like to give you guys the answers. So that's why not too long ago, we put together this course. This is a technical analysis course called Uncovering Trends. We've done this course once before. This is one of VectorVest's newer educational online courses. So here's what you get with the Uncovering Trends course. The complete program, 6 modules. Now the modules about 3 months ago were taught live. Okay, that was the first time that we delivered this course, brand new course a few months ago. The training modules that you guys get are the recorded ones from a few months ago. There are 6 of them. You get all the videos, all the slides, all the graph resource tutorials. You get 1-year access to all the material. Bonus number 1 is we will, as a class, meet live 6 times. Okay, so the modules that you will see when you go into the university and when you register for the course, the modules that you see are pre-recorded from a few months ago, but we will be meeting live 6 times to guide you every step of the way and cover the contents of each module. And you'll have private dedicated email support as well for all of our instructors. Bonus number 2, you get 70 days access to VectorVest Premium if you don't already have it. VectorVest Premium is our real-time data feed, which includes Pro Trader, which are the technical searches. You can't add a stochastics crossover to a prudent search without the Pro Trader module. So we want to make sure for the duration of the course, you guys have access to everything you need. So if you don't already have VectorVest Premium, we're going to give you access to it for 70 days. Okay? There are 60 plus lessons, guys, in this course. There are 6 modules. There are 60 plus lessons. A lot of times with courses, if there are 6 modules, there are 6 lessons. Each module is considered a lesson. There was so much content that we wanted to teach in this course that we had to break it up this way. So they're mini lessons. Some are 15 minutes, some are 20 minutes, some are a little bit longer, but within each module consists of lessons. You get the 6 live mastery support sessions as well. Again, 1-year access to the course and Pro Trader technical scans. Now, this course is valued at $1,990. There is an early bird rate that's available of $1,495, but as a thank you, I know it's middle of the week, literally. I want to thank you guys for joining me here today. We're going to offer this course. This is the lowest rate available for $895. I'm going to type in the address that you guys see at the bottom, vectorvest.com/trend. Whoops, not /trend. So you can just click on the link that I put in there. $895, you get the 6 pre-recorded modules, which include 60 plus lessons, the 6 live mastery support sessions that we're going to do. By the way, myself, Steve Chappell, Dr. David Paul, and Stan Heller are your instructors. I'm sorry, and Ron Wheeler. No, not Steve Chappell. Ron Wheeler, myself, David Paul, and Stan Heller are your 4 instructors. This was so much material here. We really felt we needed 4 instructors and not 1 or 2. So you have the 4 of us here, $895. You get the 6 pre-recorded modules, the 6 live mastery support sessions, 70 days access to VectorVest Premium if you don't already have it. And of course, like all of our educational courses in the university, this is 100% money back guaranteed. If after the course is over, if you've shown you've done the work, we know if you've done the work or not. If you've come to the classes or at least watched the recordings and those mastery sessions that we do, for our class this time around will be recorded and uploaded into the university. If you're not completely satisfied, we'll gladly give you a refund. You just have to show that you have done the work. Monica says, how long do we have access to the course? A couple slides ago, it said 1 year. Always 1 year you have access to the course. Now, when are the live sessions? What if I miss one? If you miss one, don't worry. They are recorded, and they will be uploaded to the university within 24 hours of recording. Here are the dates for the live mastery support sessions. There will be 7 of them. 7 of them. Maybe they've said 6 before, but we had to break up mastery session number 4 because there are just too many indicators that we covered in module number 4. And we learned this last class. In our first class, we had, I think there's like 16 lessons in module 4. And I'm going to get to the contents in a moment and really what's taught. And I should have done that earlier, but we had to break up module number 4, mastery session number 4. So there'll be part 1 and part 2. Those are the dates. The sessions begin at 1 p.m. Once you register for the course, you will have all the information you need. Of course, mastery support session links will be in the university. So they actually are already in there. So you can just access these mastery sessions from the university. So here are the modules that were pre-recorded. Module number 1 kind of lay the foundation. We talk about the difference between fundamental and technical analysis and the importance of market direction. Module number 2, the importance of price structure and volume analysis, the different ways to view price. We talk about trending, neutral, and extreme market environments and the importance of volume. Module number 3, which was my module because I love candlestick signals, it's called an Introduction to Candlestick Trading. I'll teach you guys a couple of different bullish and bearish candlestick patterns and how to combine those patterns with technical indicators like support and resistance and stochastics. Here's the big one, module number 4. Here are just a few of the indicators that we teach. Moving averages, MACD, Bollinger Bands, Fibonacci's. We talk about it and discuss bullish and bearish divergences in this module. This is a big one. When you go into the university after you register, you'll see the list, okay, of different indicators that we teach in this module. RSI, stochastics, envelopes, support and resistance, DPO, RSI, all of them. Basically all the technical indicators that we have in the VectorVest program we teach here. So it is a technical analysis course. Whoops. And module number 5, a really important one, trade management and psychology. Okay? There's a lot more to it than just chart reading. There's a lot more. There's more to being a successful trader than just chart reading or just fundamental analysis. There's managing ourselves. So we talk about the importance of having a trading plan, risk management strategies, position sizing, diversification, asset management. So it is a technical analysis course, but we also talk about position sizing, portfolio management as well. And then module number 6, the VectorVest Advantage, how we kind of gel and mesh the fundamental and the technical analysis. We'll talk about those pro trader technical scans and the NPI, the near perfect indicator. Okay. Yes, thank you, Paul. Paul says, are you going to send out the recording from today? Yes, it is recorded, and you will be getting the recording a little bit later. And what I also did, and nobody reminded me, which is a little unusual, I put the slides that I used, it's a PDF, I put them in the handout section of your GoToMeeting control panel. And if you're joining me via YouTube, you'll get those in an email as well. All right, you're welcome, Paul. All right, guys, so go to vectorvest.com/trends. We begin in a couple of weeks, right? June 28th. 2 weeks from today is our first mastery support session. So when you register now, remember that $895 price, guys, is the lowest price available. It's even lower than our elite rate. So if you're an elite subscriber, half off of $19.90, which is the list price, is more than that $895. So if you're an elite subscriber, this $895 rate is the best rate you're going to get as well. And this is only $895, guys, is only available for a couple of days. Only available for a couple of days. So go to vectorvest.com/trends to register. We begin in 2 weeks, and we really look forward to working with you. This is the second time we're doing this course. It feels like a much lighter load this time around, because when we did it the first time, we recorded the modules live. And not live, but we recorded them just prior to the mastery session. So you're getting some pretty new information here, with this course. The slides for today, if you go into your GoToWebinar control panel, under the handouts, it says Uncovering Trends Webinar. It's a PDF. You should see it there. Uncovering Trends, it's a PDF. All right, you're very welcome. All right, guys, look forward to working with you starting in a couple weeks. Any questions? Once you get into the course, you'll see all of our email addresses: mine, Stan's, Ron's, and David's. If you have any questions about anything that we cover in the course, let us know, shoot us an email, and we'll be there to help. All right, guys, take care, everybody, and we'll see everybody very soon.